Hi, welcome to the Market Alert for Monday, the 16th of June 2025. So Israel-Iran conflict leaves stocks sold with higher crude prices weighing on bonds. They did recover, though, towards the end. And Friday the 13th, panic, volatility explodes, oil screams and CTAs are wiped. Last time VIX was here, the SPX traded some 150 points lower, but it's, of course, found support. So this is an interesting one. Gold passes euro as second largest gold reserve asset, ECB. Central bank gold stockpiles approach record high set in 1965. Of course, all central banks have been buying since 2010, year after the QE started, and they've been doing so ever since. They know that at some point the debt is going to implode, and the best thing to do is to have something that's been there forever as a backup, and also to try and bring confidence back to the market should they have to, well, not should have to, when they have to reset the system. And gold, of course, meets all of those requirements, although you will hear speculation about Bitcoin being the new gold, which I'm sorry to disagree, but and I've made money out of Bitcoin, but not when it comes to this. The central banks are accumulating a physical asset, and that is gold, because they know from past history, and also all fiat currencies, which were on since the 25th of August 1971, when Nixon removed the gold standard in the US. It's all now about faith and not real assets. That's the only thing that's holding this thing together. So let's have a look at this week's economic news. We've got just the Empire State for today, German ZEW tomorrow, core retail sales. The key to this week really is this one. We've got the FOMC statement and rates, and they're set to remain unchanged. So the battle between Trump and Powell is going to continue should the Fed not cut rates this week. We may get a surprise one, who knows, but 4.5 is to remain on the cards at the moment. So all the focus, despite the war, because the market loves a war, but you've already established the industrial military complex loves it. So it's no great shakes for the markets. They will, move down now and again, but it just gives them buying opportunities to bring the market back. And who's going to get awarded the contracts to rebuild these places that they go and bomb? So again, expect the rates to remain unchanged there. I can't see Powell giving up his power to Trump. Absolutely not. That battle will continue, the warring of minds between the two of them. All right, let's have a look at the markets from Friday and kick off with the Dow. So in the Dow on Friday, we see a red bar there, market trading lower, but overnight, even though there's been an escalation of war during the weekend, the market is starting to move to the upside there. And Friday, you can see the market coming off the S2 level, and then we tested the S3 before the cash market, the overnight, and then that's the last time we saw prices hit this level until we got to the close of Friday. The market didn't really like what it was seeing and the speculation of an escalation. The market gapped lower on Sunday night, and now we filled the gap, and now we're moving back to the upside. Just watch the low in case there's a retest of that this morning. Meanwhile, in the German DAX, the market trading back to the support to the left, and the number for this is the 23,268 level. This will be an interesting support level, because obviously if it closes below this, it will have also taken out the 50 EMA as well. So let's look at this in a bit more detail, and you can see there the market gapping lower on the early hours of Friday morning. We traded down to the S3, great level. Market traded off the S3, you can see that, and hasn't been back down to that, which is going to be the low, which comes in at 23,287. I think that's what it is. It's quite tiny for my eyesight. So at the moment we're trading around the close. We've got the DP as well, and the 50 EMA in a 30-minute chart that we need to take out in order to move back to Friday's high. It's actually an overnight high, but it's actually Thursday's, I suppose, in one sense. So that's the upside target. The market at the moment stuck in a bit of a sideways range, waiting for the next move with regards to the world. But the main thing, the shock is over. It's already established now. We know what happens after that, don't we? We've seen it with Ukraine. It gets forgotten about. The markets return to normal and move back to the upside. In the S&P 500, well, this one's an interesting one because this one came off the low, off the 20-bar moving average, and is moving back to the upside. The 30-minute chart shows this. We hit the S3. It's a really important pivot level. If you hit this, the market tends to bounce off it a good 90% of the time. And there you can see where we are at the moment. So the low for Friday, or the early hours of Friday morning, is also an S3, so an important level if the market actually came down and had a look at this. We've then got the close, the 200 MA and the high to take out on the upside there. So in the FT100, also some buying demand on Friday. Didn't really sell massively at all. In fact, it remained fairly sideways there as well. So definitely under control here, no doubt by Starmer's instructions to the banks to keep everything on an even keel and a sound footing, just to keep Rachel from accounts happy. But at the moment, the market's stuck in a sideways range now, neither here nor there to what's going on in the Middle East, which is no surprise whatsoever. So in the US dollar, it was up on Friday but didn't hold it, and down on the overnight as well, which of course is going to lend support to the metals. So let's have a look at those. And in the metals, not a lot happening on Friday with silver. There is some demand there, and it's trying to move back to the upside. It needs to take out 36.88 in order to continue to the upside there. 30-minute chart, very, very choppy on Friday. They certainly used the excuse of the war to keep the lid on the market and overnight as well. So we've got a very, very sideways tight range at the moment. Could break either way depending on what the banks want to do with this at the moment. Meanwhile, gold moved to the upside, safe haven, but overnight is now discounting the war. It's going to become the norm. It's just an extension of what Israel's doing with Palestine, and they'll continue until such time as they deem fit. So no surprise to see gold being shaken off a bit there, because if it breaks through 3,500, the market is going to go vertical once more. 30-minute chart, you can see the slamming going on in Asia at the moment down to the DP. There is a bit of buying coming in though to lend support there. Like I say, the key here is to keep it below the all-time high, because if the war continues to escalate, then the market will try and drive to that level. Right, let's have a look at the gold-silver ratio, and that's changed quite significantly. So we can see here that we're moving up. We filled the gap, and now we're struggling a bit there, but no surprise there. We're up at 94. We could go back to 100 quite easily as well if gold spikes to the upside and leave silver just trading sideways. So again, keep an eye on that one. Right, let's have a look at Friday's market action, see what happened. So at 7 a.m, after I'd uploaded the market alert, the market tested the S3. You can see the buying coming in down here, and then they moved the market to the upside. And that was to set the tone really for the remainder of the morning there. You see the market open, trade sideways, and then continue to move back up. So nowhere near the S3. As I mentioned in the alert on Friday morning, when you get these situations where you get the market sort of plunging overnight, a lot of people want to come in and sell. The professional money has a different opinion, and they want to move the market up, and they thank you very much and take the money from you as they move prices back to the upside, as we see this happening here. The market moving up a couple of 100 points before it had another bit of a pullback as things started to unfold and become more clear in the Middle East. So you see the market go up 200, come back 200, and then we settle into the market trading sideways throughout the mid-morning, then through to lunchtime, and then waiting for the Dow to come on stream in the cash market, which it does. And then price is a lot less volatile there. And then we have a potential sell signal, which is filled. The market trades sideways in a narrower range. And then also another one there where we spike to the downside and then reverse. So now we're establishing that we're into a sideways move with this, and then the market moving back to the upside there as well, which you can see. So a choppy session in the afternoon. The market in the morning was more of a one direction. And speaking of the direction of the markets, let's just have a look, see where we are. Already moving up, as you can see, they're heading towards the DP, and there's some other figures there for Friday's high up at 23,730. I just need to maintain this upward trajectory through the DP. Volume there at the moment, it's only 20 minutes to 7 a.m. as well, so they're in there early. You can expect more of this at 7 a.m. So let's see what happens today. Depends on whether there's further escalation, and the traders are back. They may have a different opinion. They may start to see this as one of those other long haul wars, purely and simply then use that to shake people out of the long positions and then bring the market back. Right, that's it for this one. Have a great day. Enjoy the sunshine, and I will see you into tomorrow's alert. And as ever, thanks for watching. See you in the next one.